Baker, certified mortgage planner, and I am known for helping people create wealth through properly financing their real estate and other areas of finance. Welcome to another edition of Todd Talks. And in today's video, what I want to talk about is how to restructure your consumer debt in an effective manner. Right now, consumer debt is at an all-time high at $1 trillion in credit card debt. Just topped $1 trillion in credit card debt. The average consumer has a 101,000 plus in consumer debt with a rate of 11.5% and a payment of close to $1,200 a month. But the problem is that debt is largely credit card debt, or at least a good chunk of it. And included in that is student loans and auto loans. And the problem is the student loans get deferred, or they have these super low payments, so the balance never goes away. And the credit cards get minimum payments, and they never go away. All you get out of it is maintaining a good credit rating, but you don't actually get ahead. So it's money that just burns through your budget with no benefits. I'm going to show you two very effective strategies as a homeowner to deal with this. The first one is home equity line of credit versus home equity loan. I've done prior videos. A home equity line of credit is open-ended. It's a line of credit. You can get up to 80% total combined loan to value in Texas. So let's say you had a $200,000 loan and your house is worth $500,000. You can borrow up to 80% of that $500,000 minus the first loan. And you can either do an open-ended line of credit, meaning it's interest only for the first 10 years and you can pay it back and you can use it. That's very good if you need flexibility. Or the other one that's very effective is a home equity loan. And we actually have ones that go out to 30 years, which you can still pay back as fast as you want, but at least get all of that bad debt into an amortization schedule. So at least it'll lower the rate, lower the payment a few $100s, and it'll get it back on a repayment term. I'm going to show you visually in just a minute. The second thing is, many of you have tremendous equity in your homes, but you're still having this credit card debt. For those of you and the other consumer debt, that you want to get your budget and your debt under control, but you're afraid to sell your house because the interest rates are higher than what you currently have. I'm going to show you real quickly how that's not a problem, how we can take that equity, eliminate the credit card, all the debt. In other words, that strategy, you pay the debt off and end up with the house you want at a lower payment. So check this out. So here's two quick examples. This one here, right here, the first column is a home equity line of credit. The 101,915 drops your payment to $1,019. Now, you could also go with, that's an open-ended line of credit. You get to use it, pay it back, use it, pay it back for up to 10 years. And then after that, it turns into a 20-year note, or we just refinance you into another home equity line of credit if you still have the house. The other one would be the home equity loan. This is very effective too. It's called a closed end, meaning you get the whole, you just basically do the debt consolidation, pay it all off, payment drops to $932. So both of those strategies are doing two things. Number one, especially the home equity loan. Okay, the line of credit's great if you have the kind of cash flow that it would be simplify your life, consolidate the debt, and give you flexibility. But from a cost basis, the fixed rate loan, the home equity loan, that would create much better cash flow for you because it lowers the payment down. And then, like I said, at least the good thing is you at least are now starting to pay off that student loan finally, that credit card debt finally. And we could throw cars in there too if we needed to. That's a different discussion, but because they have to be replaced every 5-6 years. But either way, you can really clean up your situation. I specialize in helping people do this. And it's free consultation. So you just give me a call and we look at it. Now, let me show you the other strategy using your home is using the home equity from a sale and how we could restructure. Okay, so in this example, what we're doing is I'm showing you this is the way most people think, and right here is like they think that, oh, sell the house, take the funds and put it all into another house. And the reason we all think that, and I do this same thing, even though I'm in the business, we all tend to treat our house as some like different debt, and it's not. Each of us have a balance sheet. And for those of you who don't know what a balance sheet is, it's a tool. It's a financial tool that businesses use that lists your assets and your liabilities, and then the difference between those is your net worth, or for businesses, net equity. But for us personally, it's our net worth. And when you look at the assets, the house, but the liabilities include the mortgage and the other debt. So it's really not separate. In your financial world, they are not separate things. They're all liabilities. So when you look at from that point of view, the normal person goes to, when they look at a house, they look at like, well, I can get 150,000 out of my house, but my payment jumps to 55. But with my debt and everything, it's 5570. That's more than I want to pay. This is just one. This is in this example. But what I want to show you, and I would customize it for your situation, is if we pay off all of the debt, because this right here includes a mortgage payment and the debt. Okay, but if we just pay off the debt, say the $100,000 worth of debt, and put $58,000 into the house, the payment overall, your overall payment goes down to 51. That's the key. It's dropping your overall budget by $300 a month, and it's all on one payment with the house, without that credit card. Keep in mind, the credit card and student loans, that stuff doesn't go away for most people. It takes years to pay off unless you have some kind of huge windfall. So that's two ideas. They're very, very effective. If you are watching this video and you own a home, you're one of my clients, or you have friends, family, neighbors that have been talking about this, or if you're just seeing this on YouTube, please feel comfortable reaching out to me. And I'll get back to you as quickly as I can, usually same day, and we'll take a look. And what I normally get is a copy. Normally what I do is I do a credit soft pull, so no inquiry, just a quick credit soft pull so I can see your score, and then check your home value, and then from there I can literally run scenarios together and show you what's possible, and if it makes sense, then we can make the next step. All right, guys. So have a great day, and we'll talk to you soon.